love to have mouth-watering dishes at a restaurant? Or are you too busy with your day-to-day life and like to have packed food from a supermarket on the go? There is a little bit of 𝗕𝘂𝘀𝗀𝗀𝗀 in your life one way or the other. 𝗕𝘂𝘂𝘀𝗀𝗀𝗀, you must have heard about us.
Hello and welcome to another episode of Business Matters. I'm Sutantu and have with me the co-founder of Knox Foods and the subject matter expert, 𝗕𝘂𝘀𝗀𝗀𝗀. Welcome back to the show, 𝗕𝘂𝘀𝘀. How are you?
I'm well, thank you. It's a pleasure to be here again.
Let's take a quick look at the key points we'll be covering today. Frequent rate hikes by the RBA. Cash rate is currently at 2.35%. Major construction companies in Australia are going bankrupt. And is crude oil about to bounce back? So let's quickly look at the RBA situation. In today's global economy, if anything major happens in one country, the ripple effects are usually felt throughout the world. And what my understanding is, ever since the Russia-Ukraine crisis broke out, all the major economies in the world, they went haywire, and the immediate effects were felt by manufacturing, logistics, import-export industries. And this gradually spread into other industries and is slowly now creeping into the retail sector as well. In short, if COVID was the catalyst in spreading the inflationary fear, this conflict has just made it into a reality. And currently, the central banks all throughout the globe just have one goal: to fight inflation. Is this the reason why we are seeing such frequent and aggressive rate hikes throughout the world?
Spot on. More or less, these are the major reasons because of which all of the world economies are actually facing inflation and recession at the same time. Although hiking rates means that it's our growth, demand, and GDP get affected drastically with every movement that we do, but it is essential. It's an essential step for us to curb inflation and get things under control. We have to look at it with the perspective that it's a short-term pain for a longer-term gain. People like you and I do want things to start going back to what they used to be in terms of day-to-day prices for essentials and things that we can't go without. And for that, this is a very important step.
So the cash rate, as I mentioned earlier, is currently sitting at 2.35%, which is the highest level it has been since 2015. So by when do you think the general public will start feeling this increase in the market? And which industry do you think is the worst affected?
I think general public, you and I have already started feeling the effects. Whenever we are at grocery shopping, we can see the prices of things slowly creeping up, and not just creeping up by $1 or two, but for some products even almost doubling. So we're definitely feeling the pinch as homeowners, as a person that's looking to buy a home. We're all feeling it. We can see in the market our interest rates, our interest payments are going up. Our repayments, our monthly repayments are affected, and as general home buyers, new home buyers, are also being affected with the prices just being in a way the prices are going down for them, but still it's in a state of limbo. We don't really know which direction they're taking, because yes, the house prices are going down, but the repayments are going up, so the affordability is a lot less than what it was a few months ago. In terms of your question of which industry is affected, this industry, the construction and real estate industry, is the one that has experienced the most disruptions previously. And I think they are the ones that are affected the most as of now. They were already in tremendous pressure during the COVID times because there was constant labor shortages, there was absenteeism, a lot of it. And they were also, because of the constant lockdowns by the government, there was the stoppages in the construction work, so they were affected a fair bit. And now with the rate hikes and the way inflation is going, and with the Russia-Ukraine conflict, their cost of raw material has actually gone up twice as much. And we have been seeing the effect of that actually worldwide. I think China, at the earlier this year, we saw one of the major construction companies in China being affected, and similarly here we can see a lot of construction companies going under. which is actually inducing more panic in the industry and also amongst home buyers. I think the prediction is by the end of this financial year, nearly 10% of those companies will be bankrupt, which is quite a distressing number.
Yeah, I
Yeah.
remember when the peak of lockdown, like all
Yeah.
the construction sites, they were totally deserted. So yeah, that must really pinch them. And with all the prices and everything going up, I'm sure it must be very difficult times for them as well.
Definitely. I think the state of a country's economy you can judge by the construction activities. That's not the only measure, but it's one of the measures. And
Yeah,
in the peak of the pandemic, we could see that you're correct, the construction sites were deserted because, as per the instructions by the government, that's where COVID was spreading the most. And they wanted
yeah.
to control that. So there were constant lockdowns and the construction work was halted.
I mean, let's touch base again on the new home owners. So, what I'm reading and what I understand is that since a lot of companies they're going bankrupt, so the people who already paid a deposit or their homes were under construction, so they must be under a lot of stress as well, right? Because from my understanding, if the rates are going up, so the construction activities have an inverse relationship with the rate hikes in a way, because if the rates are going up, then the disposable income is going down and eventually leading to less demand for new homes and home loans, which significantly affects their day-to-day activities, the construction companies, which makes it very unsustainable for them to survive.
Yeah, and the situation is definitely getting a bit out of control at the moment because again there are a lot of companies that are going bankrupt. Even though the new home owners or the ones that have paid the deposits are covered by the state insurance schemes, but which means that obviously the homes will be built sooner or later. But as a new home owner or somebody that has put their life savings in to building their first home or building their family home, it's not really something that's going to soothe you that your home will be built
Yeah.
eventually. There's no deadline because most people put aside all of their life savings and put it into buying a home, and not knowing what is going on with that home is quite distressing.
Yeah.
But that's the situation as of now, and there's really no other way about it.
Yeah, that's really awful and disheartening for sure. And
Yeah,
like when it comes to bankruptcy, things are very tricky as well, right? Like companies, they owe their
definitely.
creditors and customers, and how do they manage? So it's very difficult to for the customers especially because their
Yeah,
number is
yeah.
always at the very end.
Exactly. So I have first-hand experience of that, and I can say that you are usually the last one to be receiving anything at all. It's not that you would receive the money that you've put in back, but to get any sort of reassurance of what's happening, even in terms of that, you are the last ones to know. And in terms of money as well, there's not really clarity. Of course, you're a little bit covered, but yeah, it's not the same as you actually knowing that your home will be built and you have a
Yeah.
place to call home.
So let's quickly look at crude oil. What's the latest update on that?
Yeah, crude oil is in a interesting space at the moment. There's a fair bit of downward pressure on crude oil right now. One of the reasons for that is that there is talks about price capping on the Russian oil, which will put the downward pressure. But the way I look at it is that yes, that will put the pressure down, but that could also force Russia to restrict their supplies, which will eventually mean that yes, the price is going to go up again. But the other factors that are influencing that is that because of lockdowns in China, the demand has actually gone down. So that is also having the oil prices go down. And the other thing is that the value of USD is also a major factor that is influencing the current prices of crude oil, and they are slowing down at the moment. Would they be climbing up at the same rate as they were? It's hard to say. A lot of factors. I think even the OPEC countries, they wouldn't want the prices to get out of hand. Yes, they want to make the most money possible, but at the same time, stability is important. And I think a lot of European countries are now building reserves and have been able to collect reserves, which is great. So I think would it climb up to that level? I personally don't think so. But right now, there is a lot of downward pressure on it. But it will stabilize in the next few weeks.
That was the expert analysis on the situation by Prableen. Thank you so much for your time.
No worries. Thank you for having me.
Thank you so much for tuning in. If you haven't already, please subscribe to our channel for all the latest business news. Please do share your views with us in the comment section below and like and share this video if you liked it. See you all in the next one.